everyone, I'm Dan Basse, President of AgResource Company, coming to you back from a long trip overseas. I spent 2 weeks visiting Europe everywhere from northern Norway down to Lausanne, France. Of course, I was a featured speaker at the Financial Times Commodity Conference, which was held in Lausanne. Lots of industry there. Agriculture could maybe be a little more robust in terms of participation, but 720 people talking about the commodity world, big focus on energy and metals. Now, as I boil it all down, what came very evident to me is that we are still in a structural bull market into commodities. I don't think any of that has changed. However, I do believe that this macro background of bank failures and rising rates and slowing of the world economy has dampened some of that enthusiasm for the hard assets. The one thing that really came through me is that the copper market really looks interesting from a supply-demand fundamental. We are looking at deficits globally. We're looking at many countries building out the grid, and we're looking at China coming back from its post-COVID lockdown and what opportunities are there for building an expansion in that metal. So copper kind of rises to the top of the list looking at the end of the year, but right behind it is petroleum. And you saw that OPEC cut its, of course, supply daily production by about 1.2 million barrels starting in May and heading into the end of the year. That will be very important to what I consider the biocrops of corn and ethanol and, of course, renewable diesel and biodiesel. So those are the commodities to me that really center the opportunity as we think about the upcoming next 6 months. Standing back even further from that, I again believe that there is this supply problems around the world. Now, whether it's created by problems within, of course, economies getting their supply chains back in order, freight rates are rising. Generally, as I look at the markets, I think that we are going to have undercurrents of bullishness just because there's not enough money, enough capital being spent in the commodity space to boost production longer term. This gives the grain markets in particular the emphasis of thinking about weather and that we need big crops here in and around the world, at least in the northern hemisphere this growing season. So be prepared for volatile markets, but bullishness in general and energies, maybe the copper market followed by some of the grains as we look forward to the next 6 months. Dan Basse signing off.